Hello and namaskar, dear listeners. Welcome to another insightful edition of our Commodities Weekly Audiocast. I'm Ravindra Rao, your host from Kotak Securities Commodity Research Desk. Let's explore the upcoming trends and events that will shape the dynamics of the commodity market in the week ahead. As we embark on this journey of exploration, it's evident that global market sentiments remain cautious and watchful. Recent developments from major global central banks have stirred anticipation and uncertainty, leading investors to trade carefully. The week began on a positive note the previous week, propelled by indications of subdued US inflation and prospects of substantial stimulus from China. However, a cloud of doubt emerged after Fitch Ratings that downgraded the US sovereign credit rating, citing fiscal concerns and governance issues. The dollar index displayed resilience, recording its third consecutive weekly rise, largely fueled by robust ADP jobs data. However, the highly anticipated NFP print on Friday showed mixed signals. While the unemployment rate and job additions fell more than expected, average hourly earnings saw a stronger than expected increase. This triggered a bout of profit taking in dollar index that ended the week marginally up, closing above 102. The greenback experienced a rapid decline in response to the lower NFP numbers, although the data still underscores a strong labor market historically, reinforcing the Fed's case for higher interest rates. Shifting our focus to commodities landscape, COMEX Gold faced a significant decline, marking its most substantial weekly drop in 6 weeks. The strength of the job market reinforced the possibility of rate hikes, exerting downward pressure on gold prices. Silver mirrored this trend, facing a decline of approximately 3%, influenced by the weakness in both gold and industrial metals. Investment demand for bullion showed signs of waning, reflecting reductions in holdings. Looking ahead in the week, our attention turns to the US Consumer Price Index, that is CPI data, a pivotal indicator that could impact rate hike projections for September. Forecasts suggest a potential uptick in inflation, which might intensify expectations for a rate hike, subsequently affecting the dollar and gold prices. On the price action, dollar index has given a sharp up move from the bottom levels and has once again reached the 60-day moving average of around 102.54. It is very close to the 200-day moving average as well, which is around 103.50. Bulls might face a lot of hurdles between 102.54 to 103.50, and there is a possibility we might see some kind of corrective move. On the lower side, initial support is near 101.60, which the bears might target if the resistance holds on the higher side. And below 101.60, the next support is near 100.80, which was the earlier double bottom. So the levels to watch in dollar index would be 101.60 on the lower side and 103.50 on the higher side. In case of COMEX Gold, it has once again taken support near dollar 1930. In fact, the spot gold has taken a support near 1930, and there are two important formation at the support. One is the doji and another is the bullish engulfing. Until the support of 1925 holds, which is the low of the bullish candle pattern, the bulls might be supported. However, on the upside, 60-day moving average resistance is near 1950 1952, so it has to sustain about 1950 in order to in order to stay higher, and in that scenario it might test 1984 on the higher side, which is the multiple resistance zone. In case of silver has also taken a support. This again, spot silver has taken support near dollar 23.10 per troy ounce, which is the 200-day moving average, and a bounce back was seen on Friday. Now the resistance is near 23.60, $23.65. If that breaches, and if it sustains above that, we might see prices once again going higher towards 24.54 dollars. The realm of LME based metals experienced a positive start, enjoying a notable rally and concluding the month of July with substantial gains. However, these gains were later tempered as China refrained from announcing substantial measures to boost consumption. The week ahead will see a focus on inflation data from China, which could shed light on country's economic recovery trajectory. Any indications of easing price pressures might amplify speculations about potential policy measures. On the other hand, crude oil fundamentals remained robust, leading to another week of price increases. Saudi Arabia and Russia's commitment to oil output cuts contributed to this upward momentum. Over the past two weekly audiocasts, our bullish outlook on NYMEX crude oil prices has been validated as they successfully reached the targeted $82.50 per barrel mark. Now attention turns towards the next robust resistance at around $83 per 83.80 per barrel. This level poses a significant challenge for bulls due to its status as a multi-month resistance zone. Should the attempt to breach this level prove unsuccessful, it could result in a period of consolidation within the range, which would be within the range of $79.50 to $83.80 per barrel. In conclusion, the week ahead promises volatility with a spotlight on inflation data from both the US and China. These insights will guide investor sentiment and trading decisions. The week also brings with it the insights and perspectives of various Fed officials through their speeches, providing valuable guidance to market participants. Well, we hope you found this commodity audiocast enlightening and informative. Remember, staying informed and connected to global developments is crucial for making well informed trading choices. Feel free to connect with us through your advisor or our social media platforms for any suggestion, questions, or ideas you may have. Thank you for joining us. Until next week, happy trading and stay tuned for more exciting insights.